This is PharmD KS with PharmD Capital Trading, Discord and Substack newsletter. And I decided to do just a brief video with some levels and a bit of this week's plan for everybody. If you'd like to join us in the Discord, which includes all of the written plans, you can use CAVS 15 discount code. If you don't know what's up with the CAVS, if you join us, you're going to learn. And the Substack does have a 7-day free trial, so you can at least get the daily plans along with the weekly plan for this week. Just be sure, regardless Discord or Substack newsletter, that you start with the starter kit, because if you're looking at this and it's all a bunch of gibberish, or what I'm saying doesn't make any sense, I think the starter kit will jumpstart you by many, many weeks in your trading at least. So different style, maybe not for everybody, but I think you'll learn a lot, at least from taking advantage of that free starter kit and maybe watching some more of these videos in the future. So what you're looking at here, and I'm going to clean up some of these VWAPs just to get them off the chart here in a minute. That is what you're looking at. I've got weekly volume profiles on here. I have this orange VWAP, which is the FOMC, so right before FOMC, that's where that is anchored. The white VWAP is this past week's, so that's anchored to 6 p.m. on Sunday night. And then I put a red one in there off the all-time highs, and I don't need those on there to keep talking, and it just kind of clutters up the chart. But if you're wondering what those are there for, point is they're all sort of converged right, where we're at. We also, if you drop a fib from this high down to this low, basically where we're sitting is sitting between the 0.5 and 0.618 retrace. And this 6,700 to 6,706 has been a very, very key spot. You can see it's effectively the breakdown after Tuesday on Wednesday. These breakdown single prints, if you're not familiar with single prints, again, that's all in the starter kit or on the PharmDcapital.com website. There's a blog section that's free, just email walled. It's not paywalled or anything. You can learn more about that, but they tend to be very, very important and create the lowest volume area within a low volume node, and is very important. So this is going to be the major early week pivot for me on ES, 6,700 to 6,706. If you want to use a single level, I would probably use 6,706, I suppose. I mean, coming into this week, on Monday, we had this massive trend day up that was extremely emotional at times and seems to have exhausted buyers out. This high is absolute trash. I've made the joke, a couple of different places that, this high is so poor that I got margin called on its paper trading account. If you're not sure what a poor high is, again, check the start, getting the free materials on that. But we've got these almost, well, actually, they are exactly equal highs. These two were exact. Was this third one? So that's 56.75, 56.5. So triple tops are no good like that in index trading. So what that means is that I'm calling it an exhaustion poor high. So buyers just sort of gassed out on Monday, and then what happened to come in was some pension fund selling. That's a lot of people have been talking about that on social media. I happen to know somebody that has some information that sort of confirmed that pension funds are rebalancing. So that doesn't need to be necessarily anything bearish. I did not see in the action really this entire week, maybe until later on, any kind of what I call selling with intent. Intent meaning to move price in your favor, as if you are a very large short seller, right? If you are a long exiting your position, you don't want price to go down. If you have size, it's going to go down anyway, right? So pension funds were selling, price go down, but it doesn't necessarily represent any kind of scary big short seller in the tape. And so my expectation was that, whenever these pension funds were done, or even frankly, when they were close to being done, that you would have long step in and buy this dip. And we certainly got that on Thursday. And we did spot a decent buyer come in actually as early. He actually came in on Tuesday, I want to say, sort of late in the day, and started in and basically kind of bought this all the way down. Nothing crazy size, but there has been a pretty persistent buyer in the tape at times that we are watching. So again, here we are. We've talked every single time since April where, if we've entered a 30-minute downtrend, so just meaning lower highs, lower lows on a 30-minute chart, once we break that structure, take out a lower high and put in a higher low, I truly believe every single time, maybe I've missed one, but that has led to a new high. So we have now done just that. We had a lower high here put in on Thursday. We made this sort of weakish lower low that couldn't even get all the way down to the FOMC low with a pocket of air sitting to its left. I will say on SPY, it actually did make it almost exactly there. Also on SPY, the 20 SMA and 21 EMA, which has been key for this entire trend. Of course, there have been maybe 2 or 3 instances since late April that we have traded below the 21 EMA, and the dip has always been immediately bought. Something that I'm watching is for the 9 EMA to cross down below the 21 EMA, which has not happened once since the trip off the lows. Generally, the 9 EMA has been supportive. If not, it's a trip to the 21 EMA and just a little bit lower. Dip bought aggressively, structure shifted back higher on the 30-minute chart, and then it's go time. So do I think it's reasonable to operate under the assumption that this is backed up only? I mean, I think that's reasonable, right? We always have to keep in the back of our minds that, maybe those pension fund sellers just took Friday off, maybe for once since April, we have shorts that come in and try to defend a lower high. They certainly have not in previous instances, but that's possible. So we'll keep an open mind. And this 6,700 to 6,706 is the big spot to me. So, if we're sustaining above 6,700 to 6,706, I do think we're making new highs most likely, or at least coming up to test this, call it 6,720. It's in red. It might be hard if you screenshot this to see exactly, but it's 19 to 21 is what I've decided to use for this week, which is right around this past week's value area high. That may prove as resistance first touch, but as long as we're sustaining over 6,700, no harm, no foul. That's just a higher high and a potential higher low. We could technically come down below the 6,700. As long as we make some kind of structural higher low, I think that's okay, and we could then reclaim it later. A lot of people get caught up on like, oh, it's above this level, it's below this level. It's important to look at more than just a given level. You can take more than one attempt to reclaim a weekly level if you're looking at a 5-minute chart. If you zoom out, you can see that putting in a high and finding some resistance in this 6720 range would give you kind of an inception head and shoulders look that might get some traders very excited about that. You had a head here, shoulder here, shoulder here. You sort of drop on a shoulder over here, shoulder over here. None of that really matters until you break, what would be the neckline, which is just going to be, however you want to define it, way down to the basement. So the bottom line is, to me, for any lower high to be set, a minimum requirement for me is taking out a prior day low. Minimum requirement, again. So we've seen a number of instances where, we trade higher, it fails. We get a nasty looking day. It's red. It's, some kind of an evening star or, whatever. Everybody gets bared up and they start posting that it's a lower high. And then the next day just rips higher. So again, mind your 30-minute structure. To me, this structure needs to shift back to the downside, which is going to involve taking out a prior day's low. And for right now, on Friday, it was this 57.25 spot. And I would go further and say 50 to 53 needs to be offered. So, if we come up, anywhere up into these other levels higher, I am not looking actively for any kind of like meaningful short. Like if there's a day trade setup, that's great. But I'm not like buying puts at 67.20 and expecting to get new lows. Might it happen? Sure, might happen. But I would rather play that, if there's a day trade short setup, then I might take that. But to me, until or unless we are breaking structure back to the downside, I'm not really looking to be swinging any kind of shorts. The real short doesn't start to me until much lower. So there's not a big short here that you're likely to miss. Just got a lot of questions about when are we swinging puts, actually, honestly, on Thursday. And well, look where we're at. So we swing puts when we are in a downtrend, and we hedge with puts when we sense weakness in an uptrend. If we fail this 6700 spot, we're probably coming down to 6676 to 6680, and I expect that to be reasonably well bid. I've left this 86 to 90 spot on here. It's been a very important support and resistance. We've seen it defended pretty aggressively on 2 days, both Friday and Wednesday. Actually, the buyer was doing some of his work here on Wednesday, did some more buying lower on Thursday, seemed to be in the tape again on Friday. And so it is an important support and resistance. I generally expect persistent failures in this 6,700 spot to resolve to 76 to 80, though. Another thing is that I would be watching for a look below and fail, 76 to 80. You can call it a failed breakdown if you want. It's not exactly and always the same type of thing. But for me, the first pass through this 76 to 80, I'm probably biased towards looking first pass for it to produce a look below and fail, which would then be a long. If there's an intraday setup, which we would manage in the Discord, to get long below 76 to 80 as a front run, I will consider taking that. But if we're getting lower highs and lower lows below 76 to 80, then I think we're likely taking out Friday's low, coming down to 50.53, which becomes sort of a must hold. And so we could create some kind of balance, between 6,700 and 6,650, and then have a decision later in the week. But again, if we're trading higher, I'm not looking to be short, really. Upside targets, we have this obvious poor high that needs to be taken out. And above there, I've got 69 to 75. So 6769 to 6775 as being a big spot. 6798 to 6801, 6823 to 26, 6842 to 45 should be all you need. That's probably going to be a 2x the straddle. I haven't double checked the straddle just yet. That's probably a 2x. And I think the last one I put on there for this week is 6863 to 6866, which again, you may not be able to see because it is in red up there. So those are some of my upside targets. We can always be cautious of, cleaning up this high and then leaving a proper high and then coming back through range. But, again, no reason to plan on that ahead of time. We'll just deal with that as it comes at us. So that's pretty much the big picture to me on ES, all about this spot, which again sits in the 0.5 to 0.618 retracement from high to low. We had a cluster of VWAP sitting kind of right here for decision time. We've got this major low volume node with the breakdown single prints from Wednesday, which have not been filled on a cash hours basis. And we've got another set of single prints that were not filled on a cash hours basis, I think, from Tuesday. So, there's some structure repair to be done for bulls before they are completely off the hook. And if we get renewed, kind of pension fund selling, or bears like actually happen to come out of hibernation and wake up and defend a lower high, always possible. We'll be aware of that. But this is your big spot. If we do get some nasty weakness to the downside, we did not complete this move down to the FOMC low on ES. So that could potentially be in play. Let's say we're offering 6650. We're making lower highs, lower lows below 6650. Any trap shorts from down here, I had 2 chances to cover. So perhaps it's an easier pass through those lows if sellers actually find a way, to cap 6650 as upside. Maybe we get that completion down to 6606 to 6611. And, below there, then you do get into some trouble. And again, you can sort of screenshot some of these levels. I don't think you can see the red one. So 6598 to 6600. And then this last red one down here, last weekly level, if things just get crazy for some reason out of nowhere, 6558 to 6562. We've had some escalations with the Russia situation. I guess U.S., potentially allowing U.S.-made weapons to long-range weapons to be launched into Russia. Like, who the hell knows? But for the most part, I think it's reasonable to operate under the assumption that now that structure is broken back to the upside, I would say the bulls are sort of back in control, and it's their ball to lose here. Sellers are going to have to take it away. They're going to have to prove it. So that's where my bias will be for the plans and how we will trade this for this week. And I will cover NQ briefly. It's very, very similar to ES. So I'll flip over just real quick. Again, the same 3 VWAPs that I had on ES, and you can see NQ is actually trading below them. So a slight difference there. But broadly similar. And I am using for the major sort of early week pivot is 24,759 to 24,777. Basically same reason. Breakdown single prints from Wednesday. This was overnight, so they have not traded during a cash session. If I switch over to cash only chart, you can see that sort of naked spot there that has not been tested. So that's going to be big to me as potentially triggering a look above and fail of Friday's high. And again, when bulls are in control of really the 30-minute trend, I would say bearish setups have not produced bearish results. So I would be very cautious getting overly bearish on some kind of fail in this range that comes back below, Friday's high. It would be a short at the time, probably gets 642 to 669. But until or unless we are cracking back below a prior day's low, there is no lower high anyways yet. We have to be a little bit patient with making that type of a call. Similar to ES, and honestly, maybe even more so with NQ, I would say if you get a push through this 642 to 669 spot, you've got volume point of control from this past week with some demand left behind on that volume point of control. So at first pass, I'm looking for a reason to get long to maybe front run a reclaim, or always safer maybe to just wait for a higher low back above 642 to 669. And I do think you complete the rotation up towards Friday's high and likely this 759 to 777 spot. So that, to me, on both ES and NQ, if we trade lower first, that's the way to potentially get long as a front run situation, and then just kind of see what your runners can do. Also, like ES, if we're actually getting lower highs and lower lows below 642 to 669, I think you get a reasonably clean rotation down towards 553 to 569, which would not get Friday's low, but certainly a loss of that would put Friday's low in play. And then, that's going to be kind of a pretty poor luck. If we do get some downside, just some key levels, we didn't quite make it to my 369 to 392 spot. This past week, you can see we didn't even come close to the FOMC low, didn't even get anywhere near the excess, basically just halted at some demand left behind off that FOMC day. So a little bit structurally stronger from that perspective, at least to the downside on NQ. Holding above 759 to 777, reasonably clean rotation up towards, call it 850, but 844 to 856. And then from there, really, these are kind of minor levels, and it's cleanup work to me. But a fail, just like on ES, if you get a fail, 844 to 856, or maybe a look above and fail, that has the potential to trigger some weakness, and it's reasonably clean back down to 759 to 777. You just monitor for continuation there. Again, that would be another higher high in this 30-minute trend. So just because it rejects doesn't give us a good reason to be immediately bearish. You're going to need to see follow through. You're going to need to see levels given back. You'd at least need to see 759 to 777 given back. So again, some minor spots you can take some screenshots of, but I broadly think, above 759 to 777, barring some rejection, this 844 to 856 that nukes it back below. I think if we're holding above 759 to 777, I must favor new highs. We could come up into this 880 to 888 spot, like maybe that would be the trailing week's high sat in that spot. Again, like sellers, the burden of proof is on sellers to break this back down. The high is also not good on NQ. It was like okay until this pre-market high came in and kind of tagged it perfectly. So also doesn't look complete. I'll let you screenshot some upside targets here. The big one for me, which again, you may not be able to see if it's in red, is 25,253 to 25,269 based on volatility for this week on NQ. I think, I think the last upside level include was 420 to 430. That would be like a stretch. Again, that's probably double the straddle on the Qs. And again, I haven't checked. So that's a big move. Should be safe. We tend to operate on the assumption that if we go back in up and only mode, it's going to be a grind. ES might have 25, 30 handle ranges. So that's where it becomes important to be extremely precise in your trading. And have the ability to trade both ways, especially as we come back through range. You will get some two-way trading, and so that's where having the Discord helps. We identify additional setups that may present during the day on top of those planned trades from the night before. Because you can't see everything that might happen the night before. So if you're interested in joining us, again, we've got a CAPS 15 discount for the Discord, and then a free trial on the Substack. Hopefully, at least having some of these levels for this week will be helpful to you, along with sort of this key pivot and general bias of what we're looking at here. And you guys have a good week, and hopefully we see you in the Discord or in the newsletter. Take care.